Welcome to the Company Value Investor channel. In today's video, I'm going to show you how to use the stochastic indicator. The stochastic indicator is a technical indicator used to see if a stock is overbought or oversold. Typically, the indicator is beneficial when the stock price moves back and forth. The stochastic has a number system from 0 to 100. Anything above 70 is considered overbought and the indicator turns to a red color. Overbought means that investors are buying the stock, demand is high, and the price is increasing, supply and demand. A number below 30 is considered oversold. The indicator turns to a green color. Oversold means that investors are selling the stock. The stock price is decreasing. Again, supply and demand. Any number between 31 and 69 is considered to be in the middle. My strategy is I only sell a stock when the stochastic is above 70, overbought, and in red color. This means that investors are buying the stock price is increasing, and demand is high. My strategy is this: buy low when demand is low, the stock is oversold. Sell high when demand is high, the stock is overbought. This simple strategy helps me to buy a good stock at a bargain price and sell it when I make a reasonable profit. As you can see, using the stochastic as an investment tool is easy, fast, and reliable. Try it yourself. Just go to companyvalueinvestor.com. Thank you for your time. Please consider subscribing, tap the notification bell, and if you like the video, please give me a thumbs up.